If you are a senior citizen, a green card holder, a visa worker, or a new immigrant living in the United States, the IRS has just changed the rules, and this affects you directly. Starting in 2026, new federal tax filing thresholds and reporting requirements are now in effect. And if you miss them, you could face penalties, delays in your immigration benefits, or even complications with your legal status. Stay with us until the end of this video, because we are going to break down exactly what changed, who is affected, and what you need to do right now. Welcome to Global Immigration Scope, the channel where we break down complex immigration and federal policy changes into clear, simple information you can actually use. I'm your host, and today we are covering one of the most talked about policy updates of early 2026. The new IRS tax filing rules that directly impact senior citizens and immigrants in the United States. This update comes from official sources including the Internal Revenue Service, the IRS official website at irs.gov, and cross-referenced with guidance from USCIS regarding how tax compliance intersects with immigration status, green card renewals, and naturalization applications. This is not a rumor. This is not speculation. These are real official changes, and understanding them could save you from serious problems down the road. Let's get into it. So, what exactly changed? The IRS has updated its standard filing threshold amounts for the 2025 tax year, which means the returns you file in 2026. These thresholds determine at what income level a person is legally required to file a federal tax return. Here is what happened. The IRS adjusts these thresholds every year to account for inflation, using what is called the Chained Consumer Price Index. For 2026 filings, the thresholds have been raised, meaning some people who had to file before may now fall below the limit and technically may not be required to file. However, and this is the critical part, not filing can still create serious problems for immigrants, green card holders, and visa holders, even if the IRS says you are not legally required to do so. Why did this happen? Congress and the IRS routinely update filing requirements to reflect cost of living increases. These changes are part of standard annual adjustments under the Tax Cuts and Jobs Act inflation provisions. However, this particular cycle has drawn significant attention because the changes coincide with tighter immigration compliance checks introduced in early 2026, where USCIS now cross-references tax records during green card renewals and naturalization applications more rigorously than before. When does this take effect? These rules apply to tax year 2025 returns, which are due on April 15, 2026. Extensions can push that to October 15, 2026, but the new thresholds and reporting rules are in effect right now. Who is affected? Seniors age 65 and older with fixed or retirement income. Green card holders, all permanent residents, H-1B, L-1, and O-1 visa workers, F-1 students with any U.S. source income DACA recipients, with employment income, new immigrants who became residents mid-year in 2025, foreign nationals with U.S. bank accounts or investments. Now let's break down the key details you need to know in plain, simple language. Point number 1. New filing thresholds for 2026. For the 2025 tax year, the IRS updated standard deduction amounts, which directly set the filing threshold. Here are the key numbers. Single filers under 65, approximately $14,600. Single filers age 65 or older, approximately $16,050. Married filing jointly, both under 65. Approximately $29,200 married filing jointly. One spouse 65 or older, approximately $30,750. If your gross income falls below these amounts, the IRS may not technically require you to file. But again, for immigrants, this does not mean you should skip filing. Point number 2. Why immigrants must still file, even if below the threshold. USCIS uses tax return transcripts as a primary document when evaluating green card renewals and conditions removal. Form I-751. Applications for U.S. citizenship. Form N-400. Sponsor income verification. Form I-864. Visa extension and change of status applications. If your tax records show a gap, even a legal one, immigration officers may flag your application for additional review, request an explanation, or in some cases issue a request for evidence, also known as an RFE. Filing voluntarily, even when not required, protects your immigration record and demonstrates good moral character, which is a direct legal requirement for naturalization. Point number 3. New reporting rules for foreign income and accounts. Immigrants and green card holders with financial ties to their home countries must be especially careful. The IRS still requires FBAR filing, FinCEN Form 114, if foreign bank accounts exceed $10,000 at any point during the year. FATCA reporting, Form 8938, for specified foreign financial assets above threshold amounts. Reporting of foreign pensions, inheritance, or gifts above certain values. These rules have not changed in terms of their existence, but enforcement and cross-referencing with immigration databases has increased in 2026. Point number 4. Special rules for seniors on Social Security. Senior immigrants who receive Social Security benefits, including those who earned Social Security as immigrants who worked legally in the U.S., must note, up to 85% of Social Security benefits may be taxable depending on your total income. Seniors with combined income above $25,000 single or $32,000 married filing jointly will owe federal tax on a portion of their benefits. Filing correctly ensures you do not owe back taxes, which could complicate any pending immigration or naturalization paperwork. Let's talk about the real-world impact of these changes. For green card holders, the biggest risk here is the gap year problem. If you became a permanent resident in 2025 and had income from both your home country and the U.S., you are required to report your worldwide income to the IRS for the entire year, not just the months you were in America. Missing this can trigger audits and create red flags on your immigration record. For seniors, many senior immigrants rely on a combination of Social Security, pension income from abroad, and possibly rental income. With the updated thresholds and increased cross-referencing, it is more important than ever to work with a certified tax preparer or CPA who understands both U.S. tax law and immigrant tax obligations. For visa workers, H-1B, L-1, your employer withholds taxes from your paycheck, but you are still personally responsible for filing a return. If you had any freelance income, investments, or foreign income during 2025, those must be reported separately. For F-1 students, you are considered a non-resident alien for tax purposes during your first 5 years in the U.S. You must file Form 1040-NR, not the standard 1040. Filing the wrong form is a common mistake that can cause issues later. The bottom line for everyone: filing on time, filing correctly, and keeping copies of your tax returns is one of the most powerful things you can do to protect your immigration journey. Looking ahead, here is what immigration and tax policy analysts are watching closely in 2026 and beyond. First, the trend of greater data sharing between the IRS and USCIS is expected to continue and expand. What this means for immigrants is that your tax history is increasingly becoming a part of your immigration file, not just your application forms. Second, there are ongoing discussions in Congress around a potential simplified tax filing system for certain immigrant categories, particularly for agricultural visa workers and seasonal workers. If passed, this could reduce the burden for low-income immigrant filers significantly. Third, senior immigrants who are in the process of naturalizing should be aware that proposed changes to the naturalization good moral character standard may include stricter tax compliance checks going back 5 years rather than the current 3 in some cases. Our recommendation: do not wait. If you or someone you know is an immigrant, a green card holder, or a senior citizen with any foreign financial ties, consult a qualified immigration attorney and a tax professional before the April 15, 2026 deadline. Being proactive is always better than being reactive when your immigration status is involved. Let's quickly summarize what we covered today. The IRS has updated filing thresholds for the 2025 tax year. Due in April 2026, seniors age 65 and older have higher income thresholds before they are required to file. Immigrants should still file voluntarily, even if below the threshold. To protect their immigration record, green card holders must report worldwide income, and those with foreign accounts must file FBAR and FATCA forms. F1 students must use Form 1040-NR, not the standard form. USCIS is increasingly cross-referencing tax data during green card and citizenship applications. Consult a qualified professional before April 15, 2026. Immigration rules and tax laws can be complex, but staying informed is your first line of protection. If you found this video helpful, please give it a thumbs up, leave your questions in the comments below, and share this video with anyone in your community who might need this information. Thank you for watching Global Immigration Scope. Stay informed and subscribe for the latest immigration news and visa updates from around the world.